Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
But you don't have the downside breakout. When you have the downside breakout just there, the downside breakout on price confirm our bearish signal on the RSI. So when you have the downside breakout on price, you can enter a short position because you break below the price break below the rising trend line, and the indicators has broken below its rising trend line. So you have a confirmation with the indicator you have a confirmation with the RSI that the price will go lower. So if you take a look just for the price, you have a downside breakout, and you can say yes, I enter a short position right now, and I don't see indicators. But sometimes maybe it's fast breakout, but with the downside breakout on the RSI, the likelihood for fast breakout is less important. So the confidence when you enter a short position just there is more important because you have the signal. You have also the signal on the RSI. It's a bit complicated to explain you in English for me, but I hope I'm clear. Another point very interesting that I mentioned earlier. Sorry. I have difficulties to... Okay. Is divergence. Divergence is really, really, really useful. But there are conditions for having divergence, and divergence have an important definition. Divergence appears when the price hits new extremes, but not the indicator. I mean, you have the second peak on price higher than the first one, but on the indicator, we say that it's the RSI. On the indicator, the second peak is lower than the first one. But the condition is, for the RSI, for example, is the RSI is overbought. Okay. By definition, the RSI is overbought when it trades above 70, the 70 area. So imagine that the 70 area is just there. Okay. So the second peak on the price go higher. The RSI, the second peak on the RSI is lower than the first one, and the RSI, when during the second peak on price, is over both, we have a bearish divergence. So indicates that, like for the, sorry, like for chartism, on indicators, what we saw just before. When you have the bearish divergence, it's not a selling signal. You have to see the confirmation on price. But this divergence means the momentum is more, the bullish momentum is less important. So you have to focus on price. So there we have, okay, the bullish trend line on price, and the divergence appears before the downside breakout on price. So you have the bearish divergence just before the downside breakout. So when you see the bearish divergence during the second peak on price, you have an indication that something will happen. So you have to wait the confirmation on price, And when you have the confirmation of the downside breakout on price, you have also the indication and the confirmation of the RSI. So you can enter the short position with a stronger confidence because you have not only the downside breakout on price, but also you have a bearish divergence on the RSI. So to sum up on technical analysis, just before our live demo from my desktop, technical analysis is a decision-making tool. Provide buy and sell signals and trading ideas. It's complementary to fundamental analysis and news sources. I mean, you have to keep in mind calendar, for example, in order to avoid position just before an important economic data. Makes sense. Price reflects all information available on the market. It's a postulate we saw in the first slide. May predict future movement before relevant news come out, but when I said just before, you have to keep in mind calendar. And technical analysis allow to take advantage of up and down markets. So that's it for basis on technical analysis at Trading Central. I hope we will be more precise during the next webinar. So right now, I want to share my desktop with technical analysis software in order to generate forecast on ISE pairs for coming weeks. So this is my desktop and my software for technical analysis. And we will start by euro-dollar. US dollar against the euro. The ticker code is EUU. Okay.
You're shown as EUI.
EUI, sorry. So it's the USD against the euro. Sorry. So what we can see on this chart. The pair was trading within the bearish trend line, just there. I draw the bearish channel, sorry. So I draw the bearish channel just there. Okay. The pair has broken above the upper boundary of this bearish channel. So we can say that the outlook on the USD against the euro has turned bullish after this upside breakout. You can see also on the RSI that the second low was higher than the first one. Okay, so mean that the downward momentum was less important when we are just there. Okay, it's not a bullish divergence because the RSI came back above 50, so we can say that was a bullish divergence, but we can say that the downward momentum on the RSI and on indicators was less important.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.